African Development Bank and the African Securities Exchanges Association signed a 5-year memorandum of understanding for Africa's economic growth. Fitch Ratings affirms the usual default ratings of 8 Nigerian commercial banks and the viability ratings of all the banks. Plus, Angola halves its 2016 economic growth forecast and slashes government spending. Now, thank you for joining us in today's edition of Business Incorporated. Welcome. I am Bolaji Akinwale. We'll begin with the IMF warning that Italy faces 2 decades of stagnant economic growth. Its latest report on the country puts growth this year at under 1%, down from its previous 1.1% estimate, and forecast growth in 2017 of about 1%, down from a 1.25% estimate. The IMF says Italy will not reach pre-crisis levels until 2025, by which time its neighbors will have economies 20 to 25% above 2008 levels. Italy is the 3rd largest Eurozone country. It has 11% unemployment and a banking sector in crisis, with government debt second only to that of Greece. Now, it's earnings season in the US, and of course, a good start for them. But how is it helping out stocks in Europe? Let's cross over now to the Frankfurt Stock Exchange as DWTV Channel TV financial correspondent Annette Wisbach joins me on the program. Annette, welcome to the program. Now, good start to US earnings season as the stocks in the US at new record high, also helping shares in Europe.
Yes, that's completely true. I mean, we have Alcoa, which is very traditionally starting the earnings season in the United States. It's sort of a bellwether for the United States economy, and if the biggest economy in the world is doing very well, then this is also good news for stocks here. The reason for that is that people are thinking that corporate profits actually will start to rise again in the second half of this year, and that would also justify higher prices for shares, and that we are seeing elsewhere as well. We have seen record highs, of course, in the United States. We are still far away from record highs here on the continent in Europe, but still, after the Brexit shock, there were severe losses on the markets. We have actually kind of halved those losses ever since, and are on a good way to actually see some more gains when it comes to shares.
Now, Italian banks still in focus, but Italian seems to be on track to find a solution. What kind of solution are they looking at?
Well, it's a very tricky situation. Like before the financial crisis, before there were more European common effort to tackle the crisis, everybody could bail out its banks as they wanted to. We had it in Germany, we had it elsewhere. But now the rules are saying that you are not allowed to spend money as a state, put money into your national banks. You have to bail in, so to say, which means that bondholders of the banks have to take the brunt of the losses first of all. So what Mr. Renzi wants, this is the Prime Minister, of course, of Italy, he wants to have a solution with Brussels that he might find some exceptions, that he is able to put money into like the smaller banks, and he is saying that he is seeing the discussions going in a right way. Currently, the finance ministers are meeting in Brussels, but officially Italian banks are not on the agenda, but I'm sure they are talking about it, because what I've been hearing, for example, from the German finance ministry, that they're extremely worried about the situation in Italy, because, of course, as we all know, it's all about sentiment. If the market starts to speculate against Italian banks, which we have seen already this year, that might actually trigger another banking crisis in the country, and that could also mean a revival of the sovereign crisis.
It's the monetary policy week in Britain, where the central bank will be meeting for the first time after Brexit. What are the expectations?
Well, we had Mr. Carney, which is the head of the central bank in England, today just testifying in front of the Treasury Committee, and he was saying that, of course, they look at the situation very carefully, but he wasn't saying that they are going to ease their monetary policy stance even further this week. But the majority of market analysts are expecting the Bank of England to do something on Thursday when they come together for the first time ever since Britain decided to leave the European Union. The first indications of economic indicators are suggesting that the economy in Britain will see a severe downturn. We had, for example, big fund managers stepping out saying that they're expecting the United Kingdom to dip into recession because of the Brexit vote. So what Mr. Carney and the Bank of England are most likely going to do is to cut the interest rate further. Currently it stands at 0.5%, so there's still room to cut it to say 0%, and perhaps also to expand their asset purchase program even further in order to increase confidence in the economy of the United Kingdom.
Annie is back, DWTV Channels TV financial correspondent. Thank you. Now, the African Development Bank and the African Securities Exchanges Association have signed a 5-year memorandum of understanding to amplify the impact of the strategically aligned joint effort to promote resources mobilization to fund Africa's economic growth. The MOU is expected to provide a collaborative framework for harmonizing and coordinating the efforts of the AFDB, the premier international development financial institution for Africa, and ASIA, which is the premier body of African stock exchanges, towards deepening and connecting African financial markets. The partnership will facilitate various projects of mutual interest to both the association and the bank, targeting areas such as financial markets, infrastructure development, introduction of new products in the market, improving markets liquidity, market participation, information sharing, and capacity building, among other programs. And the South African President Jacob Zuma met with Francois Hollande in Paris on Monday, discussing Great Britain's votes to leave the European Union among several global issues. South Africa is likely to avoid a recession this year, but a possible rise in global risk aversion linked to Britain's decision to leave the EU could impede its economic recovery. In a report on the risks to sub-Saharan Africa, Moody's said South Africa was the most exposed in the region to market volatility and potential shift in investors' risk perception because of Brexit.
J'ai été parfaitement clair. Il n'y aura aucune conséquence.
I was perfectly clear. The Brexit will have no impact on the relations between the European Union and South Africa. On the contrary, we are going to strengthen our commercial relations in order for South Africa to be a key partner for Europe, including within regional organizations such as the South African Development Company.
We agreed that the so-called Brexit holds implications way beyond the borders of the UK and the member states of the EU. We further reinforced our joint commitment to strengthening cooperation on regional and global peace and security, as well as global governance issues.
South Africa's President Jacob Zuma, and earlier on we heard from French President Francois Hollande. We're going to break now. We'll bring you more after the break.